The South African Reserve Bank's Monetary Policy Committee is expected to hike interest rates this week. That's tomorrow, Thursday. There are talks that the central bank should play a bigger role than just managing inflation. Let's talk about where we are now, then ahead of the announcement. We're joined by Jacobus Lacock from Fairtree Capital. Good to have you on the program, Jacobus. So, predictions of a 75 basis point increase. Are you on board with those?
Yes, thank you for the opportunity. Certainly, we believe there will be a 75 basis points hike tomorrow. That will be in line with what the Fed is most likely to do this evening as well. And we believe that the SARB will continue to hike interest rates until the inflation rate starts to veer back into the band, this 3 to 6% band that the SARB has set itself, and on its way to the 4.5%, which we think we can potentially get to sometime next year, the end of next year.
But what do we need to see happen in order for that to begin to happen?
Well, first of all, we do think that ultimately the central bank will have to keep on this hiking path, for a couple more meetings. So it means that after, this tomorrow's meeting, we'll get potentially to above 6%, 6.25%. And we need to slow down growth to some extent and slow down demand to some extent globally to get inflation under control. We're sitting with global inflation that's out of control, and central banks have now realized that. And we need to see more hikes to get demand to find a new equilibrium with supply.
A lot of it is very academic, right? And the economy works in the way in which it works, whether it's a perfect science or not is a debate for another day. But the people who are at the receiving end of this, who are bearing the brunt of this economic problem, are low-income households. How much breathing space will they have at the end of this if we still have to do all the work which you've just outlined in order to bring things under control?
Yeah, so I think the real problem at the moment is we're living in a world where we see a rising cost of living. So we talk about this cost of living crisis, which is global to some extent. And what happens is that the price of goods are rising faster than wages are rising, which means that in real terms you're becoming poorer. And so the only way to get out of this economic downturn and people falling into more poverty is actually to bring down inflation. Inflation hurts everyone. If we go to some sort of an economic slowdown that takes the unemployment rate up by 3 or 4, 5%, that's a smaller portion of the economy that's actually been hampered by inflation that's rising for everyone. Now, lower income households, a larger portion of their spending basket is tilted towards daily living costs, which is transport, food, and fuel, which means that they are bearing the brunt of these higher inflation, higher cost of living crisis in which we are in. Whereas the higher income households, they've got more discretionary income, more left at the end of the month, which means that they can actually save some, and through the savings in housing or in equities, they could potentially get a gain from those. So it's really the lower income households that's bearing the brunt of higher inflation.
And economically, who can they turn to? Where can they look for assistance, do you think?
Well, I think I agree that the central bank and monetary policy is a fairly blunt tool to bring down inflation and to ease the cost of living. But it has worked for the last 50 years, and it's the best tool that we have. But I think what is important then is to think about what role the government can play. And so we've seen that in many European countries, because of higher cost of energy, governments have said, okay, we will cap the price of energy in effect. We will subsidize, especially those households that suffers the most. And so governments may have to provide more support. That means higher debt levels, higher deficits, potentially high tax for some countries. Some countries may not be able to provide that support, but I think where governments are able to do so, they must step in and provide support to the lower households.
South Africa's annual inflation for August down to 7.6%. It was 7.8% in the previous month. That's July. Is that promising, or should we not read too much into it?
No, I think it's promising. We've already seen how the petrol prices come down from 26 rands to within the 23 rands at the moment, and expected to fall further. And we've seen the oil price coming down. We see energy prices in Europe are starting to come down. So we are seeing globally, although inflation is very high, that we are in this peak environment where most likely it's in the process of peaking over the next few months. So the lower print that we saw today from for South Africa is definitely a positive, and I do expect that we will see a further gradual slowdown of this inflation problem. But inflation is going to remain higher in many developed countries than what those central banks are targeting. So it remains a problem even over the long term.
Jacobus, Lacock, good to speak to you of Fairtree Capital.